Hello, this is Jordan, and this is your Precious Metals Video Market Update. This is being recorded on Sunday, March 6th, 2022. Hope you had a great weekend, and hope you have a great week ahead. Thank you so much for joining me. And in this video, I'm going to come out with a big call. I think gold is going to hit $4,000 in 2024, before 2025, so that gives me almost 3 years. Can silver hit $100 in that scenario? Let's talk about it. And I'm going to try and I have a few more charts than usual here, and I'm going to try and spend less time on these charts because I know I can go on and on. But starting off with the macro chart, I have two of these. The real big takeaway here is the yield curve. You can see at the top, that's the difference between the 2-year and the 10-year yields. And that difference is now down to 24 basis points. When that gets down to zero, the curve is officially inverted. And we know that that is a near perfect, it has an over 90% track record. Only one time a recession did not occur. So it warns up, when it inverts, it warns of a recession. Usually it's about 12 months after the inversion. Can be as early as 6 months or as late as 18 months. And with respect to the Fed and real interest rates, which drive gold, when the curve inverts, the Fed stops hiking, and real interest rates usually peak around that time. And if you look at the bottom there, the last 3 Fed cycles, you can see the peak in real interest rates. So that's the important takeaway. The Fed, they're starting to hike when the yield curve is going to tell them they should be stopping. So at this point, who knows how many hikes are going to get in, maybe only 1 or 2, because the curve is going to invert. And so that, not even talking about the Russia situation, this is already predicting that there's going to be a recession. If we use the average, that's 12 years, or not 12 years, 12 months into the future after the inversion. So we're probably going to invert in the next couple months. Now, the Russian invasion into Ukraine, the issue there is that Russia and Ukraine, they're both important food producers. They're important grain producers. So they're very important in those markets. And we know that Russia is significant or hugely important in the energy market. So this conflict is, even in the scenario, let's just say it calms down, there's a ceasefire, the food supply, energy supply over the months ahead, with what has already happened, there's already going to be disruptions, even if there's a ceasefire. And, gold blasting through 1900 last week, that, to me, that's what gold is signaling. And so there were some indications that inflation was probably the rate of inflation coming into the year, it was my thinking it was going to decline this year. And so this Russia invasion, which is a black swan of sorts, that is going to cause this inflation to persist and maybe even increase. Maybe even the rate will increase over the months ahead. So that, we know things in economics, they take a while. So we're not going to see inflation come down anytime soon. So what does that mean? Well, we know that the yield curve is already telling us we're headed for a recession. We know that food prices, energy prices over the months ahead, they're going to, at best, stay where they are or stay high. But, at worst, they're going to rise significantly. So, that brings up the potential for a stagflationary recession, like the one we had in the mid-70s. And so in this chart, I have the S&P there. The vertical lines, one shows when the S&P peaked at the beginning of 73, and then you have the R for the recession. Then we have gold, then we have the CRB, then we have the CRB against gold. So gold did, during the entire period, gold did the best. It peaked. You can see it peaked, a little bit after the stock market bottomed. Gold peaked a little bit before the end of the recession. So there was a negative correlation. It favored gold. The CRB as well as silver, they peaked, I want to say March or April 1974. You can see the CRB there. So during the recession, and at the bottom I have the CRB against gold. So during the recession, you can see commodities really underperform gold. So during the coming recession, you want to be in gold much more so than commodities, as well as silver. But silver, I think, peaked in April 74. So silver had a huge run, but it outperformed. I mean, it did the best before and into the beginning of the recession. So that's something to keep in mind. If and this is just one scenario for how the coming 2 or 3 years could play out. Now, gold is setting up for a major breakout, and I want to look at major breakouts in the stock market because gold in the stock market, they have these clear major breakouts in their history. And this is a stock market. This is the S&P. And the S&P has had 3 significant breakouts. And it's had huge moves after these breakouts. And you go back to the late 30s and the 40s, that was a cup and handle pattern, much like the pattern in gold today. That was a cup and handle pattern in the S&P, had a 13-year breakout. And 1949 to 1957, that was the best period in the history of the stock market. Just an incredible move higher. I think there was only one 20% correction during that period, or maybe it was only 15%. But anyway, the other thing that's important is that these breakouts occurred right after we saw a peak in commodities and gold. And the interesting thing with gold is the major breakouts in gold. The first one, you can't see it on this chart, but it was in the early 70s. That was a multi-decade breakout. And the stock market, I think the S&P peaked in 68 or 69. The Dow peaked in 66. So after the stock market peaked, that's when gold made a huge run. And the same thing happened in the 2000s. The stock market peaked in 2000. Gold's most significant breakout since the 70s was 2005. That was a 24-year breakout there. And that move, gold went from the low to mid 400s up to 6 years after that, it went up to 1900. So that was a huge move. And it also made a huge move in the it hit in 2.5 years it more than doubled, just a little bit more than a double, because it went up to 1,000. And so I'm talking about the multi-decade breakouts in stocks. You see it here in gold. So what's setting up now, this is going to be the third most significant breakout in gold. And this is a cup and handle pattern. We've talked about it. The measured upside target is 3,000. The log target, so if we're using percent, the log target, depending on how you measure it, comes out to, I think, 3,750 up to 4,100. So I'm just calling it 4,000. But historically, the log target and all the cup and handles I've looked at, it gets hit 6 to 12 months in the examples I've looked at after the first measured upside target. So that means after we hit 3,000, based on history, we could hit 4,000 a year after that. So 3,000 is the target I've been talking about a lot, but gold is going to 4,000. This is the cup and handle pattern is super bullish. Breakouts from these multi-decade bases, you saw it in the stock market, you see it here. Those breakouts lead to huge moves that go well beyond the targets. And it's not just a move for 2 or 3 years. They go higher and higher. So that's my thinking. Gold over the next 2.5 years, it's going to hit 3,000, but it's also going to hit 4,000. And the question for silver is, can silver get to 100? I'm not so sure. I'm a little skeptical. It depends on the timing of the coming recession, how long the recession is, how long it takes from now to get to the recession. But I think, $50 for silver, done deal, easily. If I had to bet, I would say I'd probably guess 70, maybe 75. But, it is possible if gold goes to 4,000, that silver could hit 100, because when silver breaks above 50, that move is going to be really explosive. So that's my thinking. A couple more slides, but just indulge me for a little bit here while I toot my own horn. Subscribe to my channel. You can click on the link in the description. It only takes 10 seconds. I publish, my own analysis with respect to videos, as well as the interviews I conduct on both my podcasts. I have the 10 Bagger podcast where I bring people on. They're giving stock picks, stocks they think could be 10 baggers. And I also have the Daily Gold podcast where I interview, top experts. Greg Weldon, one of the best gold macro guys. I interviewed Frank Barbera a month ago, who rarely does interviews outside of Financial Sense. I mean, he's been a gold technical analyst for 40 years. He goes back longer than anybody. And you'll want to listen to that interview because he made some very interesting comments about what's coming for gold and silver over the years ahead. So I hope you'll take a look at that and subscribe to my channel and, enjoy and profit from this coming move. Finally, gold stocks. This is my favorite chart for gold stocks. It shows we're looking at the percentage of assets in gold stock ETFs divided by the assets in all equity ETFs. And so this is an important sentiment indicator. It's based on real money. And at the beginning of the year, a couple of months ago, this thing was, let's look at it. I mean, it was at the same level as late 2008. I mean, that's 13 plus year low. So guys, we have gold. It's already broken above 1900. It's going to make a new all-time high, in the next couple days, weeks, or months. Make your own prediction there. And the money that's in the gold stocks just a couple months ago, 13-year low. So tons of money is going to be coming into this sector. You're not late. You're here now. Don't worry if you missed the move or you have too much cash. There's plenty of time to get in. You're going to profit from it. So there you go. Gold's going to 4,000. It's going to double in the next 2.5 years. Silver's going to break 50. Maybe it'll go to 100. Hope you like the video. Leave a comment. Let me know what you think. Don't forget to subscribe to my channel. Thanks, guys, and I'll have another video for you in the days ahead.